Hi, I'm Justin Church, and this is my Finance 452 investment strategy project. For my investment strategy, I chose contrarian investment strategy, and I'm going to talk a little bit about what it means to be a contrarian. To be a contrarian, it's a person who opposes or rejects popular opinion, especially in stock exchange dealings. The second definition, opposing or rejecting popular opinion, going against current practices, such as going against the herd or what everyone else is doing. And a little bit about the opposite of contrarian is herd mentality or mob mentality. And this describes how people are influenced by their peers to adopt certain behaviors, to follow trends or purchase items such as investments in stocks, or if everyone's hearing something on the news, is that what they're going to invest in? If a stock's doing really good, are they going to invest in it? And a quick little story about the herd theory or herd mentality. I went with some friends to an event, and we pulled up in the parking lot, and there was this huge wall, and no one could see where the entrance was, of which side to go around the building. And everyone was going down the sidewalk was going left. And I looked at my buddy and I said, "Hey, I think if we go right, the entrance is right there." And he said, "Everyone's going this way. It's got to be over here." And I said, "Okay, let's go with everyone else and see." So, of course, it turned out that we had to walk a mile around the building to get to the entrance, whether we could have went right and been a contrarian and went against the herd, and we would have went right in the entrance, right around the other side of the building that we couldn't see. So that's just a little real-world example of what it means to be a contrarian in terms of other than investments. But when it comes to investments, everyone goes through the cycle of emotion. When they are looking at the stock, they have doubt and suspicion of it, and then they build some caution, and as the stock continues to grow up, they build confidence, and that's when they buy. And when they purchase it, they have some enthusiasm and greed when it peaks out. And as the stock starts to go down, they experience indifferences, denial, concern. As they start to lose, they fear, and then they panic and sell right before despair, just to try to make some of their money back from the stock and not lose it all. Well, to be a contrarian, we would go through the opposite cycle of emotion through this. So when everyone is confident and has enthusiasm and they're buying, that's when a contrarian wants to be selling. And when everyone is in panic and despair and they're trying to sell, that's when a contrarian should buy. And so it basically goes to buy low, sell high. But with buy low, sell high, no one can time the market. So that's very difficult to do. So essentially, when everyone is selling in a panic, that's when the contrarian should buy. And then, like I said earlier, when everyone is buying with overconfidence, the contrarian should be selling the stock. And to test this theory, I found it was kind of difficult to test because it's more of an idea or a personality trait of how someone's going to invest in it. But there's a few ways to test it, and what I did was I took two stocks. I took GoPro Incorporated and Churchill Downs Incorporated, and when I was tracking them, a week in February, the week before February 12th, 2015, GoPro went down and decreased by 16.7% with their stock price, and Churchill Downs decreased by 2.07%. Well, with these two decreases, I figured that's when a lot of people would see the decreases and try to get out, and they would try to sell, such as a 16.7 decrease in GoPro. I figured there would be some people selling. So that was when I pretended to buy on February 12th. And then in April 23rd, I decided to sell. Well, on April 23rd, I tracked the returns of GoPro, and I got a positive 1.74% return. And with Churchill Downs, I gained a 18.35% return in those 2 months that I invested in these two stocks. Well, with these both positive returns, I decided to compare it against the S&P 500 to see how the S&P 500 did compared to these two stocks. And what I found is that in the week of February 12th, when I invested in GoPro and Churchill Downs, the S&P 500 was 1.26% increase that week. And when I tracked it in April, the percentage change was 1.17%. And so from February to April, opposed to my two stocks that both increased, the S&P 500 actually went down. So this proves that the contrarian investment strategy works and can be used by many people doing different investments. And in conclusion, like I said, my two stocks I picked both gained a positive return compared to the S&P 500. Therefore, the contrarian theory works, and I appreciate it. Thanks for watching.